Hello, everyone. I hope you are staying healthy and safe. My name is Katie Nozel, and I'm a senior in the AIM program covering both domestic and international consumer staples. Today, I will be presenting and offering a recommendation of Casey's General Stores, Inc., ticker CASY. Casey's General Stores engages in the management and operation of corporate owned convenience stores spread throughout 16 Midwestern and Southern states, primarily in Illinois, Iowa, Missouri, and Wisconsin. The company operates three business segments. Firstly, fuel, which made up 60% of fiscal 2020 revenues. Secondly, grocery and other merchandise, which accounted for 30% of fiscal 2020 revenues. And lastly, prepared food and fountain, which generated 10% of revenues. Casey offers products including self service gasoline, freshly prepared foods, beverages, grocery items, tobacco products, automotive products, and other non food items that you would typically find at a convenience store. Casey's was incorporated in 1959 and is headquartered in Ankeny, Iowa. Moving on to my recommendation. Casey's is the fourth largest convenience store and fifth largest pizza chain business in the United States. The company is also the NASDAQ's eighth largest retailer by market cap. The company has had 18 consecutive years of positive same-store sales growth, as well as 19 consecutive years of dividend increases. Casey's business model historically operates on a foot traffic pressured environment, but the initial outbreak of COVID-19 decelerated auto travel, which in turn reduced foot traffic in the Casey stores. According to Morgan Stanley estimates, online delivery penetration is expected to grow 13% by fiscal year 2025 compared to the 8% penetration in fiscal year 2018. So, Casey recently introduced a partnership with DoorDash to enhance digitalization given COVID-19. The company's in the process of integrating their menu, order, and fulfillment into the DoorDash app system to leverage APIs, while expanding this service to over 600 store locations. Casey also established curbside pickup options for customers in more than 2,000 stores with over 100 products available, including their specialty pizza. Additionally, the company is implementing other cost-reducing initiatives that will result in a $200 million operating expenditure decrease by fiscal year 2021, including renegotiating terms with suppliers, lowering inventory levels, and adjusting store operating hours. In light of COVID-19's compressing effect on the retail market, Casey's constructed 60 new stores and acquired 18 stores throughout the duration of fiscal year 2020. Already in Q1 fiscal year 21, the company has opened 6 new stores and has 8 stores under construction, proving Casey's ability to execute given a difficult macro backdrop. Despite weaker sales that may occur in the next year, Casey's investors should remain intact as efforts increase in digitalization and as auto travel accelerates. Overall, with reoccurring cash flows from the convenience store niche, it's recommended that Casey be added to the AIM Small Cap Equity Fund with a price target of $208.31, representing an 18% upside. Transitioning now to my investment thesis. Driver number 1, geographic expansion. By fiscal year 2023, Casey envisions expanding its network by 16%, adding 350 stores across the United States. With 88 stores in the current pipeline, including 15 stores under construction, and a historical track record of new store development, Casey's well positioned to expand. Nearly 5,000 cities without a store reside within 400 miles of a distribution center. 20% of these 5,000 cities have populations greater than 10,000 people, which is unique to Casey's business model considering stores are often located in towns with populations of 5,000 people or less. Casey's competitive advantage of monopolizing small markets positions them to win market share in these new cities, which will expand EBITDA margins by a CAGR of 7.5% by fiscal year 2023. Driver number 2, accretive acquisition. Recent M&A activity in the convenience store space indicates a potential buyout of Casey. Implications from the precedented transaction of 7-Eleven acquiring Speedway for 14 times EBITDA may prove beneficial for Casey. 7-Eleven tried to acquire Casey's in fiscal year 2010, but Casey's turned down the offer. In an attempt to support industry fuel margins, 7-Eleven has shown interest yet again. 7-Eleven is willing to use sale leasebacks to facilitate the transaction because Casey's 100% owned real estate provides strong value, making the company attractive to other potential strategic buyers or financial sponsors. Driver number 3, Casey's new loyalty program. The company offered a loyalty program called the Fleet Card Program, whereby customers accumulate points from purchases and redeem the same amount spent in fuel discounts, Casey's Cash, or through donations to local schools. The program has accumulated over 8,100 accounts and 20,000 cardholders since its launch in January of this past year. Casey's is ramping up spending on data analytics and artificial intelligence moving forward to leverage mass personalization. By identifying and understanding consumer behavior and preferences, the company can transition from mass offers to personalized communications. This program is projected to expand fuel sales by 2% year over year. In terms of valuation for Casey's, a 5-year DCF model was constructed using a terminal growth rate of 1% and a WACC of 5%. An intrinsic value of $217.27 was reached. Secondly, an EV to EBITDA multiple valuation was calculated using a 14.01 times weighted average, resulting in a price target of $230.89. Additionally, a PE multiple valuation was conducted using a weighted average of 1.24 times, generating a price target of $173.82. By weighing the models 40-30-30, a price target of $208.32 was reached, resulting in an 18% upside. Casey does pay a dividend yielding 0.70%. Similar to any company, investing in Casey's comes along with some business risks. Firstly, I'd like to address COVID-19. The pace and the magnitude of the pandemic recovery could have a significant impact on earnings as foot traffic is reduced due to travel bans, stay-at-home orders, and work-from-home environments. Additionally, gas prices pose risky for Casey's. Oil and wholesale petroleum markets are significantly volatile, and higher gas prices may increase operating expenses, which could negatively impact Casey's bottom line. And lastly, tobacco tax. Any significant increase in cigarette or nicotine products may have materially adverse effects on unit demand, given that these products average 11% of total revenue. Casey's has a strong management team to execute strategy, while these team members listed below are relatively new as of fiscal year 2020. All 3 executives bring extensive experience from the C-store and restaurant industries. Thank you for listening to my presentation. I look forward to answering questions via Teams at 11 a.m. on Friday during our class period, and also before and after that time on the D2L discussion board. Thank you.